In this video, we're going to talk about the moving average crossover strategy with the added filter of an oversold, overbought condition. Stay tuned. Hey traders, a very warm welcome to you. So again, deep diving down into trading strategies to try to find one that you and I can use to better improve our trading, or to add to our setup arsenal, to tweak or discard completely. This might be one of the ones in the latter group here. I don't know if this is that good. I think it needs refining. Let's have a look at it. So the rules of this strategy are: we have a 20 period moving average, simple moving average. We have a 5 period moving average, simple moving average. In red for the 5, in the blue for the 20. We also have an RSI on here, a 9 period is what I'm saying, and in stochastic we've got it set at 14, 3 and 3. Now the rules of the strategy are this: as the moving average, for a short, we'll use a short example and we'll flip it around for a long. As price moves lower, when the 5 period crosses underneath the 25 period, that's your first criteria. Your second criteria is that the RSI is below 50. Again, this is for the short, so let's put a 50 marker in here, indicating kind of momentum to the downside. And then the final criteria is that your stochastic is coming off an overbought condition. Flip it round for going long. Long would be the 5 crossing up above the 25, your RSI above 50, and your stochastic coming off an oversold condition. Now, the actual trigger for the trade, or the criteria for getting into the trade, is you enter on the close of the trade, of the bar, should I say, and your stop is above, in the case of a short, or below the high or the low of the bar that triggered the trade. Okay, now immediately you can probably, the shoot of you watching this are going to say, okay, what's the point of the stochastic in there? You're pretty much never going to get an overbought condition when the 5 period crosses the 25. I could be wrong on that, but just thinking kind of logically, I think unless you've really stretched, and maybe we can find an example in a second, you're probably not going to get that kind of condition. But maybe it's just an added filter to stop you getting caught in some real, aggressive kind of stuff. So let's look at this example here. So you're short on the low here. This is pound, by the way, pound US dollar daily chart. I've got a low here of 1.2994. And I'm going short there. My stop's going to be above that high, 1.3247. Okay, great. That now works nicely. We have the cross here. We have below 50 just about here. Yep, we have the stochastics rolling down from the overbought condition here. Check, check, check. We're in. We're going short. Now, I'm not sure if the criteria would be better to sell on the break of that low or to sell on the close. Again, ton of stuff that you can test and go out there and see if it fits into your strategy and your overall kind of view of the market and how you want to play this game. Anyway, this is not a bad trade. In this example, it worked out quite nice. Obviously, you're selling here, it's going down, and whatever your profit target is your profit target. Maybe you're making for a crossover back in here. Whatever, maybe you've got a trailer. Maybe you trail on a 5 period and you'll close above it, in which case it will be here. So in that example, it's not a bad little play. Let's have a look at the next one that you get, and let's see if we would have made any money on that one. Okay, so the 5 crosses over, and I'm going to say it's this candle here. I don't think that doesn't really count. It actually starts to cross on this candle here, so we've got to be kind of normal with it, or do it accurately, should I say. There's our 50. I've lost my line, but it's about my 50 here, so we're crossing over. We have that criteria checked. We have coming off an oversold condition on the stochastics and curling up. Check. So we're going long here on this. If we say we're going long at the close, let's stick with that, or we're going long above the high, either or. I don't think it matters too much. And our stop is going to be a couple of ticks below that low. How do we do on that? Let's see the numbers. So the close, 12459. The low, 12296. The one that's worrying me is this candle here. Does it break the low? It doesn't quite. Interestingly, that doesn't stop us out. So, even though this is a multi-day trade, there is some kind of profit in it. You got to hope that you're out in here before it comes out and eventually stops you out here. And actually, maybe you've got a trailer here as the 5 period crosses the 25 period. So What are my thoughts on this? My views on the moving average crossover stuff is it's a simple way to get started. Don't get me wrong; it's a good kind of way of being systematic to it. It's a good filter to say, and ultimately, all you're doing, guys, with the moving average crossover is filtering for potential trend. You're saying the price has got to go through it, and you're saying, hey, there's a trend in place or a trend starting. That's really what you're trying to do. But excuse me, it's a bit of a crude way of doing it. The RSI, I get it. You want to make sure you're weak. For me, this needs refining. And actually, let me know in the comments below how you'd refine this strategy. Would you tweak it in terms of the time period you're using on the moving average? Would you kind of get rid of the stochastic? Is it necessary? Would you tweak it and say, you've got to be a little bit more oversold or overbought? And actually, by the very nature of it, the fact that it's crossing over, you're probably never going to get that. So are these redundant? Is it just a moving average crossover with a fancy kind of oscillator that adds into it? Let me know your thoughts on this one. It probably has some uses somewhere. And in my mind, I'd want to add a couple more filters to it and use it in the right conditions, in the right market to make it a profitable strategy. Anyway, guys, dug into it, shared it with you. Love to know your thoughts on it. Those are my thoughts on it. Give it a thumbs up if you like it. I don't think it's going to blow the world apart, this strategy, but it's interesting. Maybe you can trigger some ideas, drill down into it, use it maybe as a foundation, or discard it and think, you know what, I'm going to look for the next thing. Take care. Good trading. See you in the next one. Bye-bye.